In today's segment, we'll begin with an expert's view on the SEBI's new study on IPO investors. A new SEBI study shows that over 50% of IPO investors sell their shares within a week of listing. The study looked at 144 IPOs from April 2021 to December 2023. When IPO returns were over 20%, 67.6% of shares were sold in a week. But when returns were negative, only 23.3% were sold. Many new investors are joining in, with half of the Demat accounts that applied for IPOs being opened after COVID-19. September 2024 was the busiest month of IPOs in 14 years. Over 28 companies have entered the market so far. India had the most IPOs globally in the first half of 2023 to 24, making up 27% of all IPOs. This was led by small and medium enterprise IPOs. The RBI says this IPO craze has raised concerns about companies' owners selling at high prices. To address this, rules have been changed to control oversubscription in main IPOs. Let's hear what our expert Akhil Rathi, SVP Financial Concierge at One Finance, has to say.
Thanks for having me. See, the recent surge in IPOs in India has seen a dynamic shift in the markets. Particularly, India is the largest SME in the world, and what we saw in August month, SME IPO attracts around 1.6 lakh crore in bids against around 647 crores offerings. So this speculative mentality is often fueled by media hype and FOMO, which can lead to significant volatility. What I've seen, the primary market has given enough opportunities to the companies in terms of raising capital, but it has also raised concerns about promoters utilizing their opportunity to offload their holdings at elevated price, and especially in the SME segment. And recent SEBI studies also shows that 50% investors sell their shares within first week. So this data clearly shows that investors are not long-term players. They just focus on short-term profits and all, and they're pulling their losses till long term. And what we have seen in the past, that during the bull market phase, around 50 to 60% companies only survive during that phase, which clearly shows that the valuations are not necessarily aligned with the fundamentals of the company which is going public. As more retail investors will be coming into the market, I would definitely say that they should have a disciplined approach. They should research about the company before applying in terms of financial health, in terms of business model, as well as competitive advantage, and what are the risks involved. Recently, I have seen NBFC has launched an IPO. People have applied a lot of amount in the IPOs and all. So, and in 2008, we have seen the largest IPO got stuck, and investors have lost good amount of money and all. So, over concentration should avoid. Investors should focus on what company is doing, what is the future outlook of the company before applying it. So I would say this trend will continue. The IPOs will be coming into the markets in the SME segment as well as in the primary markets. It's better that you should read about companies' RHP before jumping into applying for the IPO. Also, I would definitely say to all retail investors as well as HNI investors that they should have some goals with regards to their investments. Generally, people apply good amount of money into a single IPO. They have a concentration risk and they don't know whether to hold or whether to sell. So it's better to have a short-term and long-term approach. They should keep their investments according to their goals and according to their needs. So it's better to have a detailed approach, disciplined approach before applying into the IPOs. And I would like to say at the end that it's not whether you are right or wrong that's important, but how much money you make when you are right and how much you lose when you are wrong. So as an investor, you should always keep these things in mind. Thank you.
Thank you for sharing your thoughts.